Today has been a very exciting day. The world's largest beer brewer, that's AB InBev, became the top JSE-listed company by market cap after its listing on the local bourse today. Following AB InBev's planned merger with SABMiller, the other companies in the top 5 is likely to be British American Tobacco, BHP Billiton, Naspers and Richemont. All these companies enjoy offshore exposure, something which many local investors are currently keen to add to their portfolio. So joining me today to discuss the top 5 is Jean Pierre Verster, analyst at 361 Asset Management, and Petri, Redelinghuys, senior trader at Inkunzi Wealth Group. Gentlemen, welcome to you. Happy New Year. I can still say that because we're still in January and we haven't seen each other.
Thanks.
Let me start with you, Petri. AB InBev today, it's been an exciting day. What, 3 trillion rand that's been added? Huge amounts.
Yeah.
Your analysis of the situation, what this means for us?
Well, I think it's met with a bit of a muted response, to be honest with you. I mean, it's traded quite a few shares already by the time that I left the office, but it's trading at almost 2,000 rand a share, so it's essentially another Naspers. And I think that people are meeting it with not as much excitement as what one would have imagined. It did trade at a bit of a premium for a short period of time, but I think it came in line around lunchtime in the market. So I suppose a big day for the JSE. I mean, we increase our market cap for our entire market by around 20 to 25% just on one day alone, which is pretty huge. But I think the only real winner immediately is the JSE, as they get more fees from putting more trades through.
What do you make of all of this?
Yes, I agree. Remember that AB InBev was already listed in Belgium, in Mexico, and they had ADRs in the US. So it's not as if South Africans and I are going to set the price for AB InBev.
Yes.
We follow the price. So the price on the JSE is purely only the translated price of the Belgian price in euros, or the Mexican price in pesos, or the US price in dollars, translated back into rands. So you'll probably see for the first few days low trading volumes as people come to grips with the valuation, and there could be some arbitrage as the price moves a bit out of line with the rand equivalent price of these offshore listings. But over time, I think a lot of South African investors will reallocate a large part of their portfolios to AB InBev, especially as we get closer to the deal later this year. And they know that they will be selling SABMiller. You probably will have some investment banks going up with clever structures to help people to quite easily and seamlessly transition from having a stake in SABMiller into having a stake in AB InBev.
I want to talk about the other top 5 stocks, but just sticking with you still, Jean-Pierre, there's been a lot of analysis as to whether or not we're going to be seeing significant cash outflows because of this listing, because people want to get their hands on it. Which is it? Yes or no? Are we going to be seeing a lot of cash moving out of the South African markets?
Well, there might be cash moving into financial instruments with more exposure internationally, but because of our foreign exchange restrictions, it's not easy to effectively take rands out of the country. Through asset swap and buying shares that are dual listed and inward listings like AB InBev is, you effectively get exposure to non-rand earnings, but when you sell that share, you still bring back rands into the country. So it's not as if capital is fleeing South Africa through that mechanism. The mechanism through which a lot of capital has been moving offshore is through the foreign investment allowance, 10 million per individual per year, and that seems to have accelerated over December as more people applied for that. So I don't think the AB InBev listing has a big impact on those flows that have accelerated for other reasons.
Petri, we're talking about the other top 5 in terms of market cap. Richemont being on that list, they came out with a trading update, mentioned a couple of pressure points. Out of these 5 though, which have performed particularly well, and which would you say are still very much in a good position, or investors should maybe start to nibble at if they haven't already?
Well, okay, you've got varied performance over the 5. I mean, the best performer over a 3 and 5 year period is very obviously Naspers, but whether or not you want to stay invested in that, I'm not too sure. I think a lot of people, including myself, have said a few times that it's overvalued, it can't keep going, we can't see how the earnings are going to keep growing, and the earnings keep growing and the share price keeps going and it just never stops. So for those who are invested in that, I think it would take a really big event for them to sell out of that. But if you want something that's a bit more consistent, you look at something like British American Tobacco, and that ranks second best performer over 1 year, third best over 3 years, and third best over 5 years, out of the 5 shares that we, the 5 biggest companies. So in terms of consistency, that's the one that's been doing the best. Because it's always sort of within the top 3, and it's not shooting the lights out, but you've made 234% over 5 years on British American Tobacco, which is not too bad. You know, I suppose you could also try and pick the bottom in Billiton, although I think we're in for a bit more pain there. So it's a difficult decision to make, but if you're looking for a long-term stable sort of company to go with, I would definitely go with British American Tobacco.
Do you compare?
I do. I did another interesting analysis, which is to take the AB InBev price in Belgium, denominated in euros, over the last 5 years, just change it to rands. So effectively saying, what if AB InBev listed on a market 5 years ago and not today? And if you do that, those shares actually outperform Naspers, believe it or not, by 1 or 2 percentage points. So AB InBev in rands over the last 5 years have actually done even better than Naspers, which is amazing. Great management team, great ethos in terms of keeping a lid on costs and driving revenue growth aggressively. So I could add that into the mix, where I agree with Petri that British American Tobacco is the more consistent. Yes. But AB InBev, especially if you think about the synergies that could come from the takeover, the proposed takeover of SABMiller, could be a very interesting share going forward. And I think it's relatively fairly priced, but it's a management team that delivers period after period.
I'm just getting a sense that if you look at the sectors, the sin stocks, so to speak, that are doing pretty well, Richemont playing in the luxury space, and we've got the resources. I don't know, Petri, maybe try and help us make sense of this. If you are looking at investment opportunities, and we are still looking at the top 5, what are you going to be looking at? The sectors that they're in, the regions that they are currently exposed to, or the management team?
Well, I think you need to look at how robust the business is, you know, and that's a combination of all three. So if you look at a company like Richemont, for example, they sell products to the very higher LSM groups where, you know, they're selling luxury watches and so on. So people aren't really that affected by the economic conditions. If you're spending 80,000 Rand on a watch, you know, what inflation is doesn't really bug you too much. It's just almost the same with Woolworths, you know, like you are playing in a market where the consumer of that product is slightly better off, and that sort of general macroeconomic environment doesn't really impact them as much. Similar with cigarettes, for example. People are going to smoke, people are going to drink. AB InBev, SAB. Times are good, people drink beer. Times are bad, people drink beer. Same with cigarettes. So I think you have to look at a combination of the three things. Management is obviously very important, and if you look at a company like Richemont, for example, you know, a simple thing like China trying to root out corruption affects their sales. Chinese sales are down massively, but you now see European sales starting to pick up. So you wonder, are these Chinese tourists or Chinese businessmen traveling to Europe to buy their luxury goods there rather and then bring it back? So it's a very interesting sort of thing to try and put together, but I think that you have to look at really just sustainability of the business and look for something, a product that's not going to go away. So something like alcohol or like cigarettes is something that's going to, people are going to continue using. You can, you know, you can try and regulate it as much as you like, but the supply and demand for it, you know, the demand for it is going to continue to be there regardless of, you know, whether it's good or bad for you.
Jean Pierre, BHP, that's been in the news this morning regarding that impairment, and of course being in the commodity space, we're looking at oil, exposure to other commodities. That your view on that, you know, that commodity sector and that company, because again, it sits in the top 5 in terms of market cap, right?
Of the biggest 5 companies on the JSE, it's by far the worst performer of those 5. And it's understandable if you see what's happened in the commodity space, a slowdown in China after we effectively had a double bubble. We had a bubble on the back of the US housing market. That collapsed, and then China decided to really stimulate the economy with a second leg of infrastructure spending, and that reinflated a second bubble in China, and that seems to have burst now. So you can imagine the hangover from a double bubble burst. That's quite severe. And we've seen that with the severity of the share price decreases in the commodity space. And BHP Billiton was the one high-quality, low-on-the-cost curve commodity company that said, don't worry, guys, we're going to hold our dividend, you're safe, everything's okay. Now we get the disaster in Brazil, we get the impairment of the US onshore assets, and all of a sudden people are questioning, will BHP Billiton hold on to the dividend at the same level in dollar terms like they indicated before? I think there's a big chance that they will not. The free cash flow has evaporated. The commodity space is getting even worse. If you look at the other commodity companies, their share prices, news coming out of China, the devaluation of the yuan followed by further depreciation on the back of capital outflows indicates that things are very tough in China at the moment, and therefore less spend on infrastructure, less need for commodities. So unfortunately, I think this hangover of the double bubble could continue for a while, and I'm still negative commodity companies, including the high quality ones like BHP Billiton.
Well, gentlemen, thank you so much for coming in. One of the top 2 analysts in South Africa, in my opinion, talking about the top 5 companies on the JSE in terms of market cap. Thanks to Jean Pierre Verster at 361 Asset Management and Petri Redelinghuys, Senior Trader at Inkunzi Wealth Group.